Primary function. The financial manager has to perform the following primary function. Financial management means planning, organizing, directing, controlling of financial activities. Right to control. Preference shareholders have no right to control, but equity shareholders have all the right to control. A warm welcome to one and all. This is your Adasa here, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. Now we are discussing the Financial Management Unit 1 and Session 1. In this, we are discussing the introduction of financial management. It is all theory oriented and you will get 15 mark one question from this particular topic. That is a compulsory one. Surely you will get one theory from this particular topic. Now, so before we get into this topic, we'll understand in a simple language, what is financial management. You can take example of your mom. For example, what usually happens, so usually the dad who earns money, usually nowadays the both goes for job, but usually in every houses, out of 10, 5 to 6 houses, dad earns money. From that, 70% of money will be given to your mom. What your mom does, your mom will spend all those money for the rent, electricity, water, the gas, and all the food items, provisions. Each and everything will be managed by whom? Your mom. Usually the money is with ladies or mom. Even though it is 10,000 given to her, in that she tries to save at least 200 to 500. That is called financial management. Whatever the available cash is there, from that maximum utilization. I'll give you a simple example. You want to buy a mobile. What is the cost of mobile? Usually it is 25,000 is your mobile price. Now, what is the price of the mobile? 25,000. How much money you have? You have 23,000 with you. How much cash you have? In your pocket, you have 23,000. You go to one shop. In the shop, they mention that the mobile price is 25,000. Can you buy this 25,000 mobile? It is impossible. The reason is very simple. You are still 2,000 rupees short. Then what you will do? You will go to another mobile shop. They will ask, what is the maximum discount can you give? They will say that I can give it for 24,000. Can you buy for 24,000? Now still it is impossible. The reason is you are still 1,000 short. You have checked each and every mobile shop. You went to Bangalore, everywhere you searched. Finally, it is available for 23,500. But how much cash you have? 23,000. What is the price of the least price of the mobile? 23,500. Still you are short of 500. Then you will go with the online shopping with some credit card or with some debit card. There are some offers will be there which few banks or few institutions. In that you found the mobile is available for 22,900 with all the offer, Independence Day offer, Deepavali offer, all offers you checked with the coupon, everything you redeemed, and finally you got it for what price? 22,900. Still you saved 100 rupees. Hope you are clear. This is called as financial management. Maximum possible save money. Maximum possible avoid unnecessary payment. Maximum possible with the less amount get maximum resources, get maximum benefit. These are called as financial management. Hope you are clear what is financial management. The same thing your mom also does. Whatever provisions she buys, she will go to 5 to 6 shops and she will search where I'll get lesser price, and she will not compromise with the quality also. The same quality, the good quality, where she will get it for lesser price. If she go to any small provision shop, the price will be higher. If you go to any mall, usually they give more offers because the offer will be more. Hope you are clear. Yes, this is what your financial management. Under this topic, it is all about theory. Now, financial management means planning, organizing, directing, controlling of financial activities. You can take example of your mom only. What she does, she will plan, she will organize 100 rupees for this, 1000 for this, 5000 for this. That is called organizing. Directing, she will direct where to go, what to purchase. Controlling, she will control the money, control the finance, the financial activities such as procurement and utilization of fund of enterprises in a proper manner. Financial management means never go with the least quality so that it is available for 1000, I'll get it for 100. But if you compromised with the quality, you're gone. You're not doing proper financial management. If you go with a branded shirt, branded shoe, you can use it for more than 5 years. If you go with a local quality shoe or local quality shirt, you can use maximum 2 months, 3 months, 5. Max to max it is 1 year. This differs actually. In the financial management, getting the same quality at lesser price. That is called financial management. Role and functions of financial manager. These are the most important one. Every question paper they will ask this question. Now you come out from your example of mom. Now assume that you have appointed as a financial manager of XYZ company. You are the accountant. You are the finance manager. So what are the functions you have to follow? Now there are primary function. There are routine function. Two categories are there. You have to explain what are the primary, what is the routine. I have given in the notes. Primary in the sense what? The basic thing. You have to go with the ethical way. You have to follow all the accounting rules and regulation. You have to follow the accounting policies. And whatever the company rules and regulations are there, you should follow. The signature part, authorization part, authentication part, the check should be signed by the MD only. These are the major things. Even though if you give 1 rupee also, for that you have to be accounted. Documentation has to be done. These are the things we call it as your primary function. What are the routine function? Follow all the documentation part, and there is a making invoice every day reconciliation part. These are the things you have for your routine function. Primary function as well as routine function. Now, primary function. The financial manager has to perform the following primary function. Which are those? Financial analysis, management of the firm, management of the firm's financial structure. These are the primary. Secondary are routine. I told you, routine in the sense everyday transaction you have to update. Now, once you're done with this topic, the major topic is called as difference between preference shares and equity shares. These are your sources of finance. In the sources of finance, you have long term as well as short term. Under long term, you get all the debentures, bonds and everything. Under short term, you get equity as well as preference. Now, right to income. Preference shareholders have entitled to receive fixed rate of dividend. Equity shareholders will not get fixed rate. Whatever surplus is there, it will be given. They have special right of repayment of capital before equity shares. For example, company is winding up or closing. The first capital will be given to preference shareholder. If anything is left out, then it will go to equity shareholder. Then your voting rights. Equity shareholders will not get voting rights, but preference shareholders will not get voting right. The voting right will be given only to equity. There is no voting right for preference. Then right to control. Preference shareholders have no right to control, but equity shareholders have all the right to control. Then they can redeem at end of stipulated period, but they cannot redeem unless and until the company wind up. They involve small risk. The risk will be higher compared to preference shares. The capital appreciation, so no chance to share in company's prosperity. There is no capital appreciation, so the Appreciation means you have 100 shares of 10 rupee. What is the value? 1000. Luckily, your company is going at a profit. Your 1000 will become 2000 also. 2000 will become 5 also. Sometimes your company going at a loss. Your 5 will become even 0 also. That is what your stock market. That is what your share market. So once you're done with equity and preference, the next one is called as venture capital. This is your 5-mark question in your examination. 5 marks in the sense you have 2-mark questions in your examination. Just you have to explain what is venture capital. Venture capital financing is emerging as a new institution mechanism in the country as a new technique of financing to inject long-term capital into a small and medium sector. It has made notable contribution to growth in the development countries, particularly in the US and UK. The venture capital industry in India can profitably draw upon. Venture capital means what? You are starting with a new project, new ideas, new technique, not with the old one. Somebody is running a medical shop, you also go with the medical shop. Somebody is running a garage or automobiles, you also go with automobiles. No, go with a new concept, go with the new techniques, come with the new ideas, then 4 to 5 members pool in and they invest. That is called venture capital. Venture means what? Particular job or work. Capital means what? Investment. For that particular job, investing is called as venture capital. So leverages, always remember leverages means what? The risk you take. There are 3 types of leverages. One is operating, next one financing, and the last one combined. Operating, financing and combined. So in these 3 types of leverages, you may get problems on this, or else just they will ask you what is leverages and explain the types of leverages. The combined leverage also called as your financial leverage, and combined leverage also called as composite leverage. So operating, it is all related to your sales. Financing, your capital goods. Combined, it is a combination of operating as well as financing. So operating, financing, if you multiply, you will get combined. So we have done problems on your leverages. When you come to that particular topic called leverages, you will understand what is operating, what is financing, what is combined. But this topic is more important for your theory point of view. Okay. So this is what your topic called your unit 1 introduction to financial management. Please study all the theories which is mentioned in the notes as well as in the video. Thank you.